Oh, doesn't insurance suck? But find out why it's important.
Yep, today we have Ivy Costa from Mutual Underwriters, and she's going to answer all of our questions about insurance on Maui. Hi, Ivy.
Hey,
Hi,
Ivy.
guys.
What's happening?
Oh, my goodness, not much. It's another beautiful day in paradise.
It is, and thanks for joining us today. And it's sort of serendipitous. We planned this a week ago for you to come on, and today there is a major insurance issue going on in Maui. There's some big brush fires happening in Lahaina above Laniapoko,
Yep.
and so I thought, well, let's just start with that, because that's really the thing that people wonder is, how does that work? How do you insure for fire? I mean, I know obviously we have fire insurance, but are there things that you need to be aware of? Because we always hear the horror stories about, I had insurance, but then the insurance company didn't cover it or didn't cover it as much. So why don't you sort of just take us down that path so we understand proper coverage?
Yep. So, in Lahaina, we have both residential and we have a large community of condos as well, right? So when you're dealing with a residential type coverage, then you're really insuring your entire property. Walls out, walls in, any detached structures, everything. So when you're looking at a policy, you're looking at a policy that's a little bit more comprehensive in sense than you would with a unit owner, because you're only insuring the walls in of your unit, because your master policy, the policy that you contribute to as part of your dues, your AOL dues, covers the walls out. So, in Lahaina is already kind of our high fire brush kind of risk. And so the carriers go into the market already taking into account that they're partaking from that risk and fully understanding that, we deal with this almost every year to a degree. Sometimes it doesn't affect any of the homes. Sometimes it creates a bit of evacuation. So, but every year we kind of see the Lahaina fires coming up. Your standard homeowners policy covers any damage due to fire, be it smoke damage, soot, actual fire, damage of burning to any of your structures, be the main or any detached, if you have a shed or if you have really nice fencing. It even covers some of your landscaping. So all of those things would fall into your homeowner's policy.
How about if you had a car in the garage?
That's your auto insurance.
Okay.
Yeah, so that's your auto insurance would replace the vehicle.
Okay.
Yeah.
Perfect.
Yeah. Yeah. Or the damage to the vehicle. With a unit owner, when you're dealing with fire, then you're starting to look at, okay, is it a fire that started walls in of the unit, which then would be covered by your policy? Or is it a fire that started walls out of the unit, which then is covered by the master policy?
So what about if I had a barbecue grill on the lanai and it started on fire?
So one of the things that we're going to find out is are you allowed to have a barbecue on your lanai?
Yes,
right?
I am.
A lot of condos nowadays are actually not allowing it because we've seen so many fires come from it. So given that you're allowed and it's your barbecue that created the fire, your unit owner policy is going to cover the damages, not only to your unit to bring it to today's condition, but it's also potentially going to cover any other unit, right, that you've caused damage to, be it, again, smoke damage, soot, actual fire damage, rehousing yourself, as well as any of the other guests that you're now liable for. So there's definitely coverage there for that as well.
So it takes me to two questions. One was, the first question, and don't answer because I'll forget the other one, is what if I'm not supposed to have a barbecue grill? Mm-hmm. And then on the other one, the other question is, if it's a vacation rental property, does it cover loss of rents? So those are my two questions.
Yep. So to address number one, if you are not allowed to have the barbecue grill out there and you do, it may fall into a liable type situation, right? And the main concern is not so much your policy. Your policy is going to pay and it's going to fix the walls in of your unit. It's the master policy that may potentially come after you. Because if the barbecue is outside, you're doing damage to the walls out, which means that the master policy has to be activated to potentially replace whatever you may have damaged outside of your unit. So it's
So is it still covered, or am I then possibly liable for all of the repairs without insurance coverage?
Your insurance is not going to deny coverage to the walls in of your unit because you are outside of your condo guidelines. However, your master policy may, which means that you're on the hook for that.
Okay.
So any damage that you cause to the walls out is not covered by your walls in policy.
And you mentioned it, and that's one of the things is right now there's several complexes. I think the fire marshal in Maui they've got some new rules about whether barbecues are allowed.
Right.
And so it's really interesting. We're seeing a shakeup with that, whether or not you can have a barbecue grill on your lanai.
Yep.
And I know several complexes have had them removed.
Yeah.
And they're trying to figure out if they can do electric grills because that doesn't have open flames.
Right.
So lots of things to consider. Again, with that question, to reach out to us and we can find out in the process. So
and
now
then,
question number 2.
Yep. So to answer question number 2, loss of rents does fall into loss of use. So let us say that there is a fire in the unit and your guests are not able to stay there, or you have paid for reservations that are arriving and they're no longer able to stay there. You're yourself personally using the unit and you're no longer able to use it. All of those things would fall into your loss of use coverage.
Now, do you need an additional rider for that? Or because
Nope.
I know that some insurance policies have additional riders and there's water. I mean, there's I've heard other people say, well, I had a flood, but it was a sewer backup, and that's different than a flood. And so I don't understand that either.
Yep. So flooding is really, it has all sorts of gray lines around it. You have flooding from potentially, the grandkids are playing in the toilet, they stick something down there, the thing overflows. You have that flooding that's covered by your policy. You have flooding that is a backup, and that's an endorsement to your policy. So it's really important that do I have backup coverage? Realistically, once you start going into the high rises, it may not necessarily come into play as often, but if you're one of our lower, 2, 3, 4, it may still affect your unit.
I have a unit somewhere else, and I'm on the 11th floor, and we had a backup, and it's like, oh, you don't have that coverage. So I get it's near and dear to me. So
yeah, and that's an endorsement. So water backup's an endorsement.
When you say an endorsement, what does that mean?
It means that you're actually purchasing that protection.
Okay,
you're
so
opting into
more additional expense to the policy.
Exactly. Things like when we were covering loss of rents, just really quick to rewind. Again, occupancy or how you're using the unit, it's really important that that's determined when you're buying a policy. Because if you want loss of rents, then you have to have a policy that covers loss of rents, not just loss of use. So loss of use is when you personally use the property, and then you endorse the policy accordingly, right? It's my second home, which is an endorsement. I'm only here every now and then. I may let a friend or family member stay. It's a second home, but I rent it when I'm not using it, which is what we see on Maui a ton of. And so you want to make sure that your policy is not only covering you, but also covering what are you using the unit for.
Perfect. So that brings me to another question. I know sometimes we have properties. I have properties in different places, and one of them is a second home, and several of them are rental properties. So different rates. Let's say, and the rate for a homeowner, I think, is going to be the least expensive, right? When you occupy the home. So Correct. If I say, oh no, it's my primary residence, but it's really not. It's a second home. What's the deal in that? What's the additional expense, and what happens? How do they find out, and do they research that, and all of those kinds of things?
They don't. It's kind of like when you buy a mortgage, and you can put less money down, and you buy it as a second home rather than investment, and then all of a sudden you change your mind and you want to rent it out. The only thing is, that the carrier does have the right to decline your claim if there was a claim and you had renters in there, because the first thing that they're going to ask you is, were you at the home? What were your attempts to either stop the fire, stop the flood? And you're going to say, well, my renters said, and they're going to be like, wait, this is supposed to be your primary home. So there could be a fraudulent type of situation, especially if the attempt was to avoid paying a higher rate. Now, we've had situations where it was my primary home for many years. I rented it out. I didn't know I had to call you guys. Happens all the time. Those are things that are just a simple mistake of just not knowing the industry.
Right, but now who's paying? But who's responsible for the? I mean, is the insurance company still going to deny the claim then?
It's the gray area.
So they
you
can't.
just move out?
Yeah.
But then did you make a call to change your mailing address? And at that time, you sure you didn't have a conversation that you were moving?
Right.
You know what I mean? Yeah.
Good information. So let's change gears and let's talk about condos. There's condos that are on the water, or there's homes on the water, and I know that it seems like there's a lot of stuff happening with sea level and flooding and tsunami and all of that. How do we need to look at all of that?
So condos right now, and I'm so happy you're bringing this up. We're really going through a huge transition with the condo market and an insurance carrier appetite for it. A lot of it has to do not so much with climate change, if you will, which you would then say erosion and sea level rise and all of those things, but it's more the poor maintenance of a project or the lack of proactivity in replacing things like the plumbing, the electrical, and the roofing since it was originally built. So that's really where the carrier is kind of stepping back and saying, okay, we're willing to insure this, but maybe instead of the $500 deductible that used to be standard, now they're saying, I want you to pay $2,500 deductible because they want more skin in the game from you, before you activate that policy.
When you say you, are you talking about the master policy holder or the
unit owner?
Unit owner. Okay.
We are also seeing huge increases on the master policy. Standard master policy deductible used to be $5,000, $10,000, $15,000. Everybody would gawk at. Now it's easily $25,000, $50,000. We've seen master policy deductibles that are $500,000.
Wow. So let's just explain for everybody too. A master policy is the policy that covers the entire condominium complex, the roads, the driveways, the parking lots, the grounds, everything, the pool. And then the individual unit owner, if they choose, they will have insurance. Now, does an individual unit owner, are they required to have internal insurance if they're getting a mortgage?
So nowadays we're seeing it being required. It used to be where it was just required if you had a mortgage. And so you had a lot of exposure out there because, we have a lot of people that don't have a mortgage anymore. And so they really didn't think it was necessary because they're already paying this lump sum into the master policy. Your unit owner policy covers any improvements and upgrades that have been done to the unit since it was originally built. So let us say Maui was originally built with the cost of carpet throughout all the units. And now you have some that have really nice stone. And so that gap in cost is going to be covered by your unit owner policy. If
I have an all original unit and ugly furniture, do I really need, and I'm okay with what I have, do I really need insurance?
You need insurance so that you don't have to come out of pocket with that master policy deductible. So let us say you need to activate the master policy. The AOAO is going to come to you and say, yeah, that's fine. You can file a claim. Our master policy deductible is $50,000. Normally.
Is that per unit or is that spread over the whole complex?
Not if it's you who wants to activate the master policy, because you're saying, this was my fault. I don't have insurance. I want to activate the master policy to rebuild my walls in to its original condition. They're going to say, yeah, but there's a master policy. So if you had a walls in policy, a unit owner's policy, it would cover that master policy deductible.
Okay, great. And then one other part of that is, and this is really my bigger, greater thing for my clients, it also includes a liability portion, correct?
Yes. Yep.
And that's where, if we got clients that are buying second homes or spending, $1 million, $2 million on a condo that they're going to be renting, or even just letting friends use, that means they have a high enough net worth where there's exposure there. And that's what I think is where the real value is we could write a check. A lot of these people could write a check for $50,000 for upgraded carpet but that liability where a trip and fall or somebody gets killed inside your unit. So
I'm actually in the midst of a claim, and it was a unit on Maui. And my client had her sister, and her sister had some friends, and they were visiting, and a woman fell in the unit and broke her back. So she's actually on Oahu right now, and we're already way into the hundreds of thousands of dollars. She was medvaced over here. She fell down really weirdly. It had a bit of stairs in the unit, and it just happened that it was one of those freak accidents. So the liability policy is defending her, is settling, it's paying those medical costs, and absolutely, and thank goodness she has $1 million limit. So
it's interesting stuff.
Yeah.
I mean, I know I know I get frustrated with insurance, but I
Yes.
recognize the value in it. And
Yeah.
so that's really interesting as well.
And I don't blame you. I do too.
So let me step even further back out. Again, we talk about a lot of our clients have high net worth umbrella policies. Can you sort of explain how that
Sure.
works, how they, and do they need to be updated, and how everything affects?
So umbrella policies are great, especially if, like you said, you're a profile that you now own multiple properties, or maybe you just have an additional property and it's rented, or it's short-term rented, or you're allowing friends to use. So the umbrella policy is literally going to do what it's saying. It's going to be an umbrella over all of your assets, ideally. So any properties that you own, any vehicles. So let us say you have a vehicle accident, and the liability on that vehicle insurance runs out because you're involved in some sort of catastrophe. Your umbrella policy will kick in and protect you above and beyond what your limit is on your auto policy. Let us say you have a situation with a unit, and again, you're dealing with something like someone falling, breaking their back. You're going to exhaust the liability limit on your personal property policy, be it homeowners or condo unit, and then your umbrella policy is going to come in, and it pay things like judgments against you, to defend you. It follows you worldwide. It's really a great and super affordable. You're talking about less than $500 a year, depending on the level you go with, but to get into it for $1 million, to have that much protection. Yeah.
I just want to let everybody know we're on the call with Ivy Costa with Mutual Underwriters, an insurance agent that we love to recommend. We've been talking for a while. And
yes.
Someone said hello from the 9th Island.
Hello.
Awesome. So I've had a lot of questions. Michelle, you have questions?
Yeah. So you were mentioning the master policy on condos. Is there a standard of what that includes, or it's different for every HOA?
Yeah, most policies will be as built in our community, especially Maui. Most policies in the state of Hawaii are designed it's called as built policy, which means that they're taking the responsibility to rebuild the project to how it was originally built. So if something was to happen, you're going to have coverage for the property. There's normally liability. If there's something like someone, you have a guest at the pool, they slip, fall, they sue the association. So liability is going to be covered.
So that's for liability outside of your condo, but then you still need it for inside.
Yeah, absolutely. So this is the master policy is covering you, but you as part of an entire community, right? So it's more like a shared loss, if you will. So it would be something associated with, we didn't properly, the stone is breaking around the pool and someone trips. That should have been addressed because it's the responsibility of the AOAO to upkeep the property and limit their exposure, your exposure as a homeowner as well. So the master policy will normally include property damage, liability. It will include fraud by the members of the AOAO, the board members, in the event that, they do something that they're not supposed to do with the reserves. It includes hurricane coverage. If you're in a flood zone, it will include flood coverage, flood by a body of water moving into the project and creating any kind of damage or loss. So they include just about the normal things that if you were to look at your project as a home, it's just that it's in the millions, right? Because we're looking to replace potentially an entire, project. So, but all the coverage is there, and they're pretty across the board. They will all include around the same thing to different limits of insurance because you can opt into those.
So I know that in my personal policies, we have homeowners hazard and risk, and then we have a separate hurricane policy. Is that pretty much typical on everything, that where there's two different policyholders or different policies?
So if you're financing in the state of Hawaii, you'll always be required to carry hurricane. Even people that don't have a mortgage, normally we see them opt into it because we do have so many scares. We've had some of the skirts that hit Lahaina. Hurricane company paid out on some of them because it was a named hurricane that came, and kind of swept by us. But yeah, you can have it as an endorsement. When you buy it as an endorsement, again, in addition to the policy, right? You're buying it as a mirror to your policy. So usually it's really expensive. So that's why we do an a la carte policy, because basically you want to have enough protection to suffice the lender's requirements and enough protection to protect some of your things. But the deductible is 2% of your coverage A. So it can be $60, $70, $100,000. So the likelihood of you filing a hurricane claim on your hurricane policy is slim, unless, again, we have a major catastrophe, and then it makes sense.
Got it.
Yeah.
All right. Well, lots of information.
Yeah, thanks so much. It was a lot of great.
Any ideas, any things you'd like to point out that we covered a lot, but there's so much more, I know.
Yes.
But
yeah,
any other?
I would love to see people be a bit more diligent in their condo docs, because I think condo right now is going through such a transition. Really go through it, really see what is my master policy so that you have enough coverage to cover it. You don't have to come out of pocket. And then two, when was the last time this roof was updated? When was the electrical or the plumbing? Because what's happening is we're seeing also policyholders, unit owners being assessed, right? The AOA decides, you know what, we're going to replace this roof, and everybody has to come into the kitty with 15 grand. You have to do it. You're a unit owner. You're partaking from that, replacing of the roof. So it's really good to know those things. Look at the condo docs, look at your master policy. What do they have in reserves? What is the discussion of potential increases on your AOAO dues? Things of that nature. Definitely.
I thought of something else that we were just talking. So I buy my insurance policy from Mutual Underwriters, and you say, okay, Tom, what's your house worth? Or we do an estimate, and it's worth $700,000.
Yep.
And I bought that policy 5 years ago. Well, all of a sudden, my house may have doubled in price to $1.4 million.
Yep.
Is anybody changing the valuations on the insurance policy, or am I supposed to be going to my insurance broker or agent and saying my house is worth way more money? Or what happens if I'm paying a policy on a $700,000 house and I have a loss and it's worth $1.5 million? How does all of that work?
So two separate pieces. One, your policy does include about anywhere between 3.7 and 4.2 inflation that's included. So every year your policy actually grows with the cost of things. Okay. And then two is that even though your property may now be twice as much, it may not take twice as much to rebuild it, because our values in Hawaii are so much about demand and our inventory. And then also our land value is a lot, right? Depending on your location. So your home, to actually rebuild it, is probably most accurately growing with that anywhere between 3.7. I mean, nowadays it's a little bit off. We're probably into the fives, but it is growing to take into account inflation and the increase of cost to rebuild your home.
Because we're not insuring the land as a
Correct.
general rule. We're insuring only the structure. Okay, that answers questions. But I guess because we've had such huge increases in valuation, if you experience that, call your insurance broker up and just say, hey, am I still properly insured?
Yeah. Ideally, when you get your renewals every year, that's something that you want to kind of see. And I've had clients call me back and
look at those.
Well, ideally, but I do have clients that sometimes will have, a contractor friend, and they said, listen, my buddy was just here and he said, I have a really nice, home here, and I probably should be looking at about $700 a square foot. I mean, I have homes in Wailea that are, $1,200 a square foot. So it just kind of depends how custom, how specific do you want to get. But yeah, have a good agent on your side. That always helps.
I love it.
Yeah.
All right. Well, perfect. Thanks so much, Evie. I appreciate your time, and hopefully we've answered some questions for some folks. I know you've given me some great insight. Any last words?
No, thank you for having me. And if anyone has any questions.
Yeah, how do they get a hold of you if they have questions or they need insurance or they want to, even that's the other thing too, is I would recommend that because what happens with your homeowner's policy, the insurance person gets that policy, it gets auto, and you've got a mortgage, it just gets auto paid every year. You don't think about it. It's probably worthwhile to every couple of years to, reinvestigate, get some new bids and look at what you're paying and see if there's a better option out there.
Absolutely. Yeah. So, So any questions, give me a call. Should I blur out my name? Okay. So it's 808. 808-853-7760. Give me a call even if you're out shopping or you have clients and you're taking them out shopping, or you just want to run some quotes or you want to compare. I'm here. Easy to reach, text, call, whatever it takes.
And where can you write insurance policies at?
The entire state of Hawaii.
Entire state of Hawaii. Yep. Very good.
Up to 100 million. No restriction on proximity to water and no restriction on distance to fire station. That's big for us.
So let me just chime in there. There are some insurance companies that say we won't insure oceanfront. There's some insurance companies that say we have to be within 100 meters or 100 yards or 1,000 yards of a fire
hydrant.
Fire hydrant. Thank you. That was the word I couldn't find. So just keep that in mind as well. That's important things. And then also, one of your branches of your company also does commercial as well. Yes. Not that we're going to talk about that, but that's another alternative if you need commercial policy. I know that Evie's company and her crack agent Dave helped me with a commercial policy also.
Yep, so we cover it all.
All right. Evie, thanks so much. We sure appreciate your time, and you're welcome to stay on. We're going to do a little bit more. You can bail out, whatever you prefer.
Thank you so much for having me. Thank you.
All right. Aloha.
Thank you.
So a couple other things we want to talk about. Thank you, Evie, again from Mutual Underwriters. A couple other things we wanted to talk about. We started with the show with Evie. There is a fire that's been rearing its ugly head in Lahaina. They thought they had it under control. Yesterday, it got windy again, and it picked back up. So above Laniapoko, they were possibly evacuating. I'm not sure if they've done that or not, if they had to evacuate anybody. But
I think some people were evacuated. Yeah.
Up on the top of Laniapoko. So it's just one thing. Our hearts and prayers go out to those folks, and hopefully that they're safe and that they have good insurance policies.
Yeah.